Good morning. It's 4th of July, Tuesday, 2023. We're going to do some current market analysis, see what's going on in the markets, and see if we can't find some levels that might be interesting for possible trades. A little bit about myself. You've seen previous webinars, so skip through that. Been doing it a long time. Normal risk disclaimer. Remember, trading is risky. Make sure you know what you're doing. Make sure you read this risk warning disclaimer. So what are we going to do today? We're going to have a look at some news that might be coming up today and for the rest of the week. I'll be looking at some charts, doing my normal top-down approach, narrowing down to see if we can find any trading opportunities. Today's going to be a little bit tough because with July the 4th, and the US being on holiday, it's going to be a little bit tricky. In my past experience, sometimes it can be a flat day, sometimes it can be a volatile day. So you never quite know, but the real volume, won't be there to push, particularly indices, one way or the other. We're also going to have a look at some of the free Zenfinex tools that you might be interested in using. Take note of this URL. It's free. Register, and I'll show you some of the tools I'm going to use, including the economic calendar, some trading views, some featured ideas, which is another way of looking for trading ideas that might be interesting to you. And how to access them, really easy. Just go to the pluszenfinex.com, register. It's free, and I'll show you how to use those individual tools either on here, or there are some videos on the portal which you might find useful. So let's get straight into charts and see what's going on. And I'm just going to start with gold first, as I always like to do. This is some analysis we've been doing for some time. We spotted this consolidation area, breakdown, retest, and it's continued going down. And we're starting to form a bit of an upward channel, but let me start from the beginning so you understand how I come to these conclusions. And what I'll do first is just delete all the lines and we'll start again. And that way you'll see the approach that I take, which is always the same. And basically what I'm looking for is turning points and levels, and obviously direction as well. So we'll be looking to see how we can take advantage of these moves. And as always, I start with a slightly longer term frame. I'm going to stick with daily for now. There's a bit of spike, I don't know why that's there. So let's just go to more recent times. I'm just going to pull this down a little bit, and we're going to start framing the market. As I keep saying, whilst prices at this point, we want to see, in the context of longer time frames. So as I always do, I start with marking up key levels very visually, very roughly, and then as we get to smaller time frames, we can start, making them a bit more accurate in terms of, potential turning points for trades. So we can see here we're framing the market from a daily perspective. Let me pull that over a little bit so you can see. So what has it done? I won't bother with putting all the support resistance down here. In fact, having said that, I will put one down here. So what have I done from a very visual point of view, just so you understand what I do? I'm looking to see where major turning points have occurred. And we can see, can't we, that there was obviously a major turning point here, a major turning point here, a double top, if you will. And markets came all the way down, or the value of gold, I should say, came all the way down here, bounced around the bottom, and then started its move upwards, hit the top of this range, and now we're sort of in the upper section of this from a daily perspective. So what we can see here from the daily perspective is that it's on a level of support which has been only retested in the last few days. And this same level has been interesting, to traders in recent times as well. Look, because look, it turned away from here, rejected here, bounced off here, messed around there. So we're exactly at that point. So we need to make sure we have this in play. And then we'll go down to a slightly smaller time frame, or a 4-hourly time frame. And remember, regardless of the time frame that you're trading, you need to build a frame for what price is doing right now. You want to see where the upper and lower boundaries. So from the daily perspective, we've drawn these lines in, and they're pretty good. I'm happy with where they are. This one obviously is relating to some support further back. So from a 4-hourly perspective, let's have a look to see if there are any levels that we want to draw in from a 4-hourly perspective. And do bear in mind, it's July the 4th. So I would just be very cautious and careful when trying to pick directions, because US holidays always have that kind of effect. So let's just have a look back a little bit on how price moved away from this level of resistance and sort of made its way all the way down from a 4-hourly perspective, hit these levels, and I will now adjust this a little bit lower down, because what we're actually seeing is that once this level of I just need to see it, 1895, call it 1900, a round number, it's bounced off there, and now we're seeing some short-term potential resistance at around these levels here. And why am I drawing it here? Because look, price came down and sharply moved away, couldn't come back to it, came back to it, broke through, probably knocked out a lot of support, a lot of stops that may have been here for those traders who were trying to go long and had built their stops in here. And then after it had one push up, it then stayed underneath, and it's still underneath as we speak today. So now we're trapped in this little window here. So you can see from a longer term perspective, now we're coming right down to where we are now. And let's just have a closer look at, so before we go to the closer look, we can see there's also some resistance up here as well. Let's make sure we put that in here as well. So we got some support, resistance, and a new level of resistance, really. So as this level, as of 29th of May, hasn't been retested, and although it found support at these levels here, it's now underneath there. So what we need to see happen is a convincing breakthrough from the top here, and then see if we can make this line of 1931 be a level of support. Currently, as we speak, it's resistance, right? So even, let me magnify this so you can actually see it a bit better. We had one push up back to this level here, which was previously printed, around this level here, 1931, and immediately rejected it, right? So prices came back to here and rejected it. However, what we can see here, and those of you who watch these on a regular basis, support, resistance, and channels. So we can start drawing a channel from a 4-hour, oops, sorry, let me get rid of that thing. Channel. So now we've formed a bit of a channel, an upward channel, where at least once it turned on here, and now we've got this area here which we have to be mindful of. So hopefully you can see that just by following a very simple approach, you, without any indicators, without any moving averages, without any kind of oscillators or those kind of things, you now are clear in your mind, right? You can do a summary of what gold is doing just after a few minutes of simple analysis, right? So we've got some resistance here, and for certainly the last 4 or 5 days, it's been not coming lower, than previous lows, right? So those of you who have watched some of my other videos where I talk about high highs and low lows, it's every time it moves away, it comes down. The cool thing is that it actually broke this level here, which was a previous, from the downward perspective, a higher low. So it kept coming down. This went lower than this level, finally found a level here, and from a 4-hourly perspective, it's starting to go up. So already, from a trading perspective, right, we're in this area and zone here now. And welcome those who've joined me. I can see a few people joining. Remember, I always say, ask me questions, and then I can delve deeper into any kind of questions you may have. So let me magnify this area. So now, from a longer term perspective, we're looking at gold, right? We don't actually have to, use moving averages or oscillators or anything like that to give us a summary of where we are now, right? The summary is that we found a level of support. There was some resistance from a 4-hourly perspective. Struggled to get above it, rejected it outright, right? So this level is clearly important. So now we're looking at levels which might be important to us if we are to look for trades, right? So currently what we're doing is that this low didn't get lower than that. So our state of mind now is still going up, with being mindful of the fact that this is not only resistance, but it's also a top of a channel here. And this will form the trade idea that we're going to look at. We're not going to chase this price, right? It's just pointless, because, and if I go now down to a 1-hourly perspective, you'll understand why, right? So there's no point us trying to chase this price. It's gone too far away for any location for us to put a stop loss in. So what we have to do now is wait to see if this level gets broken, right? So this level now is our benchmark. So now we're starting to frame our market, right? So if we are on the upside point of view, we've got some resistance from the top of the trend line channel and from the level of resistance. Remember, it kept hitting it and coming back down. I won't go back. In fact, let me just, for those of you who haven't seen it, kept turning away. Clearly, this is a level that we need to be mindful of. Probably just a little bit low. Now that we've gone down to the 1-hourly perspective, we can really start getting to precise numbers now, right? Because at precisely this number, it turned. At precisely this number, it turned. Precisely this number turned. So clearly, right, there is an importance to this number. And what we have to do now is we have to look for a trade location. And two things, or a few things, that we need to consider first, right? What we have to consider is this going to, again, like it has done many times, hit this level and come down? That's one possible scenario, right, from an hourly perspective. The other is that once it gets this level, if we find that it wants to break through and then use this as a level of support, then what we'll be doing is looking for opportunities to continue this upward move, because really the next level here, now let's start drawing some hourly levels that might be interesting to us as well. So let me just magnify that a little bit. So let's just observe from an hourly perspective, right? From an hourly perspective, right, this level is important, 1965. So what it did, bounced off it, came back to this level, broke through, resistance. So this is an area where if we can get some support, we're going to be looking to retest these levels here and this level here, right? So this is our window of trading. There's pointless trying to, for example, from an impulse perspective, we think, okay, upward channel, let me just buy. What can happen, right? It could just turn from here and start a new grind back down to this level to chase the liquidity at these 3 points here, right? So I said 1 push, 2 push, 3 push. And when you get 3 pushes, often you'll get some, turning around this level here. So this is going to be a very key level. Okay, I see one question pop up. For the channel, do we draw the wick or body of candle? Good question, Raj. So what I try to do is I don't fixate on the exact points. What I like to do is to look at past behavior, right, and see, look, so let's just talk through this level here, right? So you can see that this is what happened before, and by the way, this happens a million times, right? I've seen this up a million times. So what it's done, it's broke through, closed below, and then it had a bit of nonsense around here. But I'm more interested in the fact that twice in the last 1, 2, 3, 4, 5 days, it's hit that level and bounced straight away from it. So it's, in this case, right, it's the wick. But there'll be other instances where I'll use the candle or the body of the candle. And, there's nothing to stop you really from drawing, for example, this level here, right? Because this encompasses, so rather than a wick or body, it's an area or region. But I'm always going to look much more closely at the turning point. This wick is telling us something. It's telling us precisely at this point, markets moved down, and actually it kept moving down for, 1, 2, 3 days, right? So this clearly is an important level. What will people have above here? They'll probably have some stops or breakouts. So the two types of traders that are participating in this from a sort of pending order basis rather than a market order basis, I'll talk about that another time, is that there's clearly going to be liquidity up here, and that's why we've got this channel of it. Sorry if I'm drawing channels on top of channels and what have you, but I'm really trying to demonstrate the importance of these levels. So if, for example, if you were short, where would you put your stop, right? You'd put it up here first, then you'd put it up here, and you'd move it down, right? And you would either get out here, or if you were still looking for a long-term play, right, this would have stopped you out. And that's why you've got this sort of sharp move up, because it's really taken out these stops. These stops, had anybody put stops here, would have been taken out, plunged through, came back, and then it started its move back up. I don't know if that answers your question. It's a very long-winded answer. Do I use candles or do I use the top of the wicks? So the top of the wicks are very important because they are telling you precisely where the market turned. I mean, precisely at that point here. And certainly for that day, it couldn't get above this level here. The previous day, it couldn't get above this wick here, but the body was here, right? So anybody that was, for example, let's say you took a short because you were playing sell the resistance, right? You put your order here, you put your stop here, you're still okay. But as it goes further down, you might start bringing your stop down, and this will have knocked those stops out. So let's say this level presented itself. So you're short. Because what I'm trying to do is I'm trying to see how other traders are in the market and where they would be putting their stops, right? This is what we're trying to establish, because that's where liquidity is. So they put stops there, they got knocked out. Those that went short here, they're still in, and there's going to be some liquidity up the top. I see another question here. Okay, cool. And it's just a question of looking at price action and looking to see where other people may be trading, and I'll give you another example here. Let's say you as a trader or a group of traders, it's probably better to say, right? Somehow you were able to get short here, right? You're going to put your stop here. So let's say you managed to get on this move. Maybe what you were doing, you were looking to take a break out of this consolidation, right? It came down and you got short at this level here, right? You've already been stopped out, right? Because maybe you would have put your stop above here. And if I do really look closely, that would have probably took the breakout traders out. Those who waited for a retest, they never got in. Those that took the plunge, right, they're going to start putting their stops and moving their stops. So they see this move down, they're in profit. It goes back, they say, great, I'm going to put my stop here. Oops, let's get rid of that. Put their stops here. Because what market is always doing, it's trying to chase liquidity, right? It's trying to find out where other traders are. And those guys, if they move their stop down to here, because they saw the price move down, they're in profit, and they've moved their stops down to here, right? And this move would have got them out as well, right? So it's just a question of trying to see the other side of why that price moved. I don't really use any indicators. So the ATR, the average to true range, I don't use that as a, by all means, use it, back test it, see if it works for you. But I have taken, all this time to get rid of anything that may distract me from what is happening right now. That's what I try to do always. And if I start adding this, that, the other indicator, it takes away from what I'm actually seeing in front of me, right? So now look, so we were trying to build a thesis here. I went back and showed you why, why some of these levels are very important, how they get knocked out, how this level didn't go below here, took all that liquidity, right? So those who were still believing it was short would have got stopped out here. And now we're at a key level, really, a key level of resistance. Because if I go back to daily, sorry, I think that's more of a 4-hourly level that we're looking at. So we can see here, okay, I'm going to have to get rid of some of these lines. And I'm just going to go through the whole exercise of getting rid of them, just to show how simple it is to put them in and how simple it is to confirm your idea. Don't be frightened of saying, I've taken all this time to draw these lines, now I've just removed them. That's good, because what you're doing is, if you are, really trying to focus on the turning points, right, you're theoretically going to be drawing the exact same lines, right, because these don't change, right? So look, turned here, turned here, turned here, right? So if we now go to the 4-hourly, it's the same picture as it was before, right? So we can move this down a little bit, because from a daily, we can see this is probably more of an important level. We can see this is an important level. Remember, we talked about price bouncing, 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 bouncing. So we're, within 3 or 4 pips of the other lines we drew when we just removed them. So that kind of confirms that you're kind of doing the same thing over and over again. The levels don't change. We can even go back to the hourly and we can start drawing our channel. And what I'm really trying to teach you here is I'm trying to teach you the repeating of the same thing over and over again. So we're exactly what we were doing before. We said there's some levels here. So we looked at this wick here. There was another level here, right, which is precisely where it turned last time. See that precision that we just talked about literally 2 or 3 minutes ago? So don't be frightened of doing some analysis, removing it, and see if you get the same results. Because if you get the same results, it means you're doing the repeating thing over and over again. I won't bother drawing all the higher highs and lower lows because I've just done those. What we're more interested in is what is going to happen when, and I'm going to make this a bit thicker. Oops, got rid of it. Let's put it back. Properties, just make it maybe a different color, just so we know what we're doing. Right, so this is now a key area for us, right? So we looked at our bias, which was on the upside, with a warning, right, that this level here now is also going to be a key level of this hasn't been breached and this hasn't been breached. I will mark this back up again. This level hasn't been breached and this level hasn't been breached, right? So what is it going to do, right? After this bounce of support, it's now coming back to this level here. And what I really want to do is watch how price moves around the 1930 level. Remember the 1930 level we just talked about before I removed the lines? We're exactly back to that same point. So too late to try to take the bottom of this channel and try to take it back up here. Potential trade would have been getting on the pullback and seeing how close, seeing price action. And if I pull the zoom in a little bit, we'll see from the Asian range. Let me just draw the Asian range in. Asian range mean, this is where sort of the Asian market was open. It's broke out of that level here. So it's 8 o'clock. So we're looking at around this. It's broken out and it's looking to see if there's any way it can attack this 1930 level. So it's too late for me to take this move up, which is fine, not a problem. I wouldn't take it anyway because I'm now looking at this level of resistance and I want to see how price moves around this. It will either do one or two things. No, that's not helpful, but it will either come back and it won't be precise, but I'm just showing you generally speaking, or it will do this, or it will mess around here. And what we want to do is seeing how we can take advantage of a move above this level here, or if it does retrace, seeing how it will behave around this level here. Because if it breaks this, then where our bias is then going to change to the downside. If it goes above here, we're going to continue our bias on the upside. I hope that was useful. I'm just going to spend the next few minutes looking at the Zenfinex tool that I talked about earlier. And again, those of you who follow me, I really pay keen interest to this calendar tool. Let's just see what happened yesterday. All right, so yesterday we had some ISM manufacturing numbers come out. It was forecasted to be 48. It was 46. So what we can do, we can look at how some major currencies like the Eurodollar, for example, behaved around there. So what initially it had a gap up 30 minutes afterwards. I always try and look after the 4 hours, actually, it's a bit better. So what it's done, moved back down, came back down, and then really more or less almost exactly where it started. So moved in a range of 36 pips, which isn't a particularly big move for ISM. And if we look at how it behaved previously on charts, we can start looking to say, was actual less than forecast? What happened? July the 3rd was 46 against forecast of 48. Now, what is happening? If we go to the Eurodollar on our charts, we can see a bit, what's happened subsequently. So if we go to the Eurodollar, just move some of the stuff. There it is. So yesterday we had ISM, ignore all these other lines because that was for something else. So what it did in the hourly hours afterwards, right? So this is where the ISM probably came out around here, right? Moved up, came down, and a lot of this really is to do with July the 4th. There's going to be no real big moves. Sorry, there can either be big moves or no moves, sideways action for the rest of the day, because we talked about it already, going back to the news. So we can, and the point I'm really trying to make is, you can look at these economic calendars and see how price behaved when it was actual rather than, let's have a look here, if that helps us. So it might be a better one. So what it's saying here is that the price in the US dollar, 42% it was bullish after 5 events and 58% bearish after 7 events. So the average range is 50 odd pips. So you get a lot of information, because not only does news move, on that day, but it also has an impact over the subsequent days afterwards. And if we just look at what is happening for the rest of the week, we'll see it's an important week. If I just include that. And today and Friday. So this is Thursday. Let's see if we can get the whole weekend. This week is probably better. So we get Friday in, because Friday is non-farm payroll. So let's go to Friday, July the 7th. And we can see we have non-farm payroll. And if we look at the volatility after that, 15 minutes, sorry, after 4 hours, it has a 61 pip range. So that one does move markets quite a lot. So you'll have to be, and utilize this time before the news, do some analysis, do some chart analysis, and try to start building up a picture that if the actual is greater or less than forecast or actual, what did that do in the past? Because what you're trying to do is you're trying to build up knowledge for when you are looking to place trades, right? You're utilizing some of these tools to help you with your analysis. We've got about another 5 or 6 minutes. Let's have a look at some of these other tools here, which I've talked about. So the 2 main ones I'm going to look at are featured ideas and trading view, technical view, sorry. So let's have a look at featured ideas. So featured ideas, look for trading opportunities with, in this case, moving averages and on a 1 hourly time frame. So you can actually start looking for trade setups. Now, there's nothing on the majors except the Aussie dollar. So we see here an opportunity recognized July the 3rd, yesterday, bullish pattern. The bullish pattern was, and it will tells you the balance between buyers and sellers dominated, blah, blah, blah. You can read that at your own leisure. So what you're able to do with this is utilize this tool as something that you can go back and look at the setups, look at why they came up with these setups, and then start building your own sort of expertise in this. And and more importantly, look at this, take a note of it, see what happened tomorrow. Did it come through? Did it do what they said it was going to do? And that's how you're going to start building confidence in your own trading. Let's have a look at technical views. So technical views is, again, looking at, and this is another confirmation, bullish Aussie dollar. We just looked at trade ideas. So they have kind of came up with a scenario saying that long positions above 666s with targets at 67, 100 pip sort of target. And if it does go below a certain level, look for further downside. So they're putting like a line in the sand and saying, okay, at this level, if it stays above it, we're looking to go long up into these levels here. Or if it goes below here, we're looking for shorts, and they're utilizing things like moving average, Bollinger Bands, and such like things, including support and resistance, to come up with the idea from a 30-minute perspective. There's a bullish point of view. So what we can actually do, why don't we just look at the live chart and see if they were right, or if we agree with what they're saying. So let's just see, by getting a chart, we can go to the Aussie dollar. Just a second. There's the Aussie dollar. And they were talking about bullish, but they were talking about from a 30-minute perspective. Let's have a look what's happened. So they're looking for a bullish bars, which is what they got. And they probably had some targets. In fact, let me just go back and read that and see if we can't match it up. So this was at 66, all the sixes up to 6,720. So if we go to that, so the sixes, let's draw all the sixes in. That's putting it like that. Triple sixes, buy above here, and what they were saying was that the targets should be around 6,700 and 6,720. Let's see if that's been reached. So 6,700, and we'll draw another line which will be the target that they've suggested. 6,700. And then 6,720. So this is basically what they've mapped out as being the trade above here. Now, from my perspective, again, what I would be doing is saying, okay, does this accord with my analysis, right? So I might just do that. I've got 3 or 4 minutes. Let me just do sort of top down quickly on this. Let's get rid of the objects first. I'll get rid of everything and then we can put them back in again. So quickly, what we do, we start from a daily. Right? We look for key turning points. Right? Turning points. Starts framing the market for us. We see another level here. And although it's broken through here, this was clearly an important level here. So I'm going to put that in as well. Right, so I don't know, maybe I'll get rid of that. So now that's from a daily perspective. Let's go from a 4-hourly perspective. We'll go all the way down to 30 minutes, by the way, and just see if what they are saying with their trade ideas kind of chime with ours, right? So we can see from a 4-hourly perspective, we got some levels here. Look, prices hit that, came down, found it a problem, eventually pushed through to create the resistance at the top here, broke through, became resistance, came to a support level, 6603, and 67 is some resistance here. So if I now go down to an hourly perspective, right, we can see that there's some level of support here, resistance. Look, it plunged through, resistance, resistance, broke through, support, 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 right? Can draw our channel in. Bottom of the channel, let's put the 66 line in. It's all the sixes. I'll change the color to make it what they had. Let's make it that color and make sure that it's precisely at their level here. 3 sixes, wasn't it? So above here with a target of 70, let's just double check. I want to be disingenuous to them. So they said 6,700 and 6,720. So let's draw some more lines in. 6,700 and 6,720. So their target is 67 dead first. Again, make it precise. 6,700. So that's their first target. Let's put their second target in. $67.20. Remember, the purpose is just really just to see if they do give trading ideas on the dashboard. You know, do they so the top blue is the target, the high target, which is right on top of the resistance here from an hourly perspective. And the first target is around here. If I went to a 30-minute point, probably has some levels here. No, I'm not sure why they put it there. Maybe it's just the round number. So they sort of buy around here with a target there. First target, second target. Well, I've got some major resistance at 67, so I don't think I would probably have it just a little bit lower if I was putting a target on there. Right, guys, is there any more questions before I call it a day? We've been at it for 40 minutes. I try to do it between 35 to 40 minutes on Tuesdays and Thursdays. Remember to, you know, go on to the Plus Zenfinex, sign up for a free membership, and then you'll get a lot of videos, a lot of this type of analysis in there, and including the trading tools that we just looked about. Let's just go back to that. Now, there's a whole host of tools, and there are videos on how to use these individual tools as well. So it's free. So if you think you'll be useful in your trading, you know, do and take advantage of it. So I think, unless there's any questions, I think we're going to call it a day. And remember, it's July the 4th. Be careful. Volumes will probably, I think there's one more question. Let me just see if I can answer this question. Okay. I don't think I've got time, but I think I will. Let me see if I can do a quick analysis on, somebody's just requested some analysis on US oil. So let's see if I have that chart here. If not, sure, pull it up. US oil. Oh, it is there. So let's create a new chart. US oil. Right, so somebody's just requested that I have a quick look at oil. So let's do our normal top-down approach. Right, from a weekly perspective, this is a level of support, right? And even from a weekly perspective, there's a level of resistance here. Might just go up a little bit higher. And I think this person that's asked the question before, I'll answer it again. You know, where you get the most interaction is probably the best place to put it, whether it's the wick or the candle, you know, where it's touched it more times than not. And if we just pull it down here, we can see sometimes it was the body, sometimes it was the wick, but more interactions were at that price, which is 82.54. So right now we're bumping along from a weekly perspective. If we go to a daily perspective, right, we can start tightening up our lines a little bit. We've got this gap, which is really important. I'll come on to gap. I won't have time to cover gaps here. But what we have been doing, we've been consolidated or trapped, I should say, in this range here between 74 and 66, right? So if I just move this up a little bit, right, 67 dead was our range, right? And what it's been doing is been going sideways. However, this spike up is interesting. The fact that it's pulled back into here. Let's now go to the 4-hourly perspective and see if we can find any levels that we might be able to take advantage of. Well, do remember though, I'm not giving you trading or investment advice. I'm just giving you how I look at charts and how you might be able to take advantage of the way I do it. So I can see here, so we've got resistance, had a poke through and then tumbled down back to level of support, which is at 67. And we're right in the middle of it at 70. So for the last few days or a couple of weeks, it's been grinding its way up. The fact that it broke this level here is important, right? Because this is a level of, shorter time frame resistance. If I go to the hourly, you'll see that a bit more clearly. Let's remove that. Let's get rid of that. So let's have a look at the price action from an hourly perspective, right? So what it's been doing, found this level of resistance, broke through it marginally, and then tumbled down back to this level here. And now that we're down to an hourly, I can start moving these levels a little bit more closer. And I might just draw another one here because this is obviously going to be a key area for us. So will it get back to between 72 and 72.50? Let's look for the reasons why, yes and no. And of course, how to look for trading areas, basically. So look, what we can see here, that this level here, 69.93, right? So let's go back in time. Hit it, came back down, 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 burst through it, but came back down, came back down. So this whole level of resistance has been being tested for some time. Eventually broke through it, bounced off it, came back to revisit, and now is trying to make its way back up to this level here. So what are we observing on a bit more closer perspective? What can we see that might be able to help us? So if we are now saying that 69.93 now is a level of support, maybe just a little bit lower than that to be safe, right? Because we've got this level here. But we just need to, I won't make that a solid line. Let's just put a little line here. Right, so if you were looking to take it long, right, we can start looking at where we might be able to look for stops and target ones and targets twos, right? So where would we look to get in? So this, if I now magnify this, right, what we can see here, oil is a little bit strange, particularly on the hourly basis, because you get, on Wednesdays, you get the oil inventories report. So that usually moves markets a lot. In fact, if I just show you what I mean by that, I'm going a bit over time. Maybe I'll do that another day. But what we can see here now, there's clearly some support here, right? So we can see this whole area here. It's been a bit of consolidation. From an hourly perspective, just bear that in mind. The longer the time frame, the stronger the support. So we've got a support level here, and it looks like it wants to come and retest this level here. And certainly back into this level here. I don't know if you found that helpful, but what we can see here, it's bouncing off this level of support. It's had loads of goes at this resistance and retreated every single time, right? Retreated, eventually broke through, had one more look at it. And since here, it's bounced off it every single time, right? So it's showing a little bit of strength here. It's hitting its head on 70.35. You've probably got from an intraday perspective, right? Some clean air. We found support up into this area here. But if we were looking for a slightly longer term perspective, right, what is this really showing us? From a longer term perspective, this bar here, from a daily perspective, right, showed prices went up and then closed right back here. So that's a rejection of higher prices. So we need to look at these three candles to determine if this is a continuation from the bounce from here, marching back up to here. I don't like this rejection bar here, because it's rejected price at 71.54, came back down, but couldn't get past support. So for me, it's not very clear to me. This usually indicates a move down. And you get a pin bar like that, because if you look at pin bars in the past, look at this one here, prices went up. Can you see any other pin bars? This pin bar here, prices went up. Pin bar, prices went up. So I would be cautious about trying to fill this wick in. Not saying it won't. I'm just saying that, from experience, I would use this this wick really as a zone where I wouldn't trade, because I'd want to see it break above here, or I'd want to see it break below here, back to test down here. So that's about the best I can do. It's a little bit unclear for me. The pin bar is actually making me nervous about going long. Might still go up, but I see this rejection as being quite important. I hope that's helpful. I've gone a little bit over time, and I'll be back on Thursday, and we can see how this pin bar panned out, how gold, what did it do? Did it break out this consolidation? Did it reject this level of resistance? These are the answers that we can get on Thursday, because it will unveil itself. Any more questions? Yeah, my pleasure, Raj. Hope to see you again on Thursday. And this time I will say to you, have a great day, and see you Thursday. Bye-bye.